Hello, how are you? If you're tired of just looking at every time frame just to get an entry, I think it's time to look into this video. I know everyone is talking about there's no way you should trade just one time frame, but you can as long as you put this into practice. Let's get into the video. Now, all you need to do is to go to 1 hour. This is the only time frame you should be trading because everything is in this time frame. Okay, you don't need 4 time frame, you don't need the daily bias, you don't need the weekly, you just need 1 time frame. All right, this is how you should be trading this. Now, all you need to do is to work with your left. Your left is where everything is. Your left is where your information is where your bread and butter is where the source is on the left. So where was our old low? The old low should be on the left. There's nowhere else it should be on the left. So what you need to do is to zoom in your chart. First thing you need to do is to zoom in your chart. When you zoom in your chart, you would see all the lows, all the liquidity. As you can remember, I said liquidity is not just old lows and old highs. The candle itself is liquidity, okay? Now, what we want in this situation, we want to see those old lows. We don't care if the liquidity was taken out, we just want to see the old low. So if you see from this situation right here, which is I already have all my notations down, which is okay. Now we just want to see this low. So the low that was, the low could be recent, the low could be old, it does not matter. But we want to see what has been happening on the left. If you see here, we had a nice push to the downside, and this was the last low before we had that nice arm to the upside, which took us to the order block. Now, after that, okay, you don't know what's going to happen, right? All you know is it's this situation that happened. Now, you want to see that push to the downside. Yes, you have seen that. So this is our old low. This old low is coming from the left, isn't it? It's coming from here, okay? So that's what you want to see. You want to see those old lows being out. That is your buy. So when we had an old low, that is a buy. You don't complicate this. On an old low, you buy. On an old high, you sell. As simple as that. Now here we have an old low, so we're going to zoom in our chart. We have now our information. We don't have to do anything else. What we need to see is this beautiful, nice rejection, which is great, that's fine, which is even telling us more that price wants to reject that area. Price have taken out the liquidity that was on this old low right here, okay? Now this is in black, you might not see this, let me make this white. So we want to see that area there of old lows been taken out. We would even have a confluence from that rejection candle. Now we have a push there to the upside. Okay, zoom in your chart. The best thing to do for yourself is to zoom in your chart. If you don't zoom in your chart, you would never know what happened, how it's going to happen, because you have to put everything into your arsenal, into your market. Okay, now we have this nice push to the upside. The only thing we're waiting for now is to see a fair value gap, okay? If you're not seeing a fair value gap, which is those nice big 3 candles, you're not going to take the trade because you might get it wrong, okay? So what we need to see now is the nice 3 candles. So after this old low, we have a push to the upside. From that push to the upside, we have 1, 2, and 3, which is nice, okay, over here. So that's the candle. So I already written that for you guys, which is an entry. So I wrote ENT to signify an entry because that is where the money is. So the market will come, most likely, most of the time it does come in and give you that nice wick to just show that they just taken out that fair value gap. They have already taken that price out. So now this is invalid. So that's what you want to see. So you will put your sell limit there on that candle, okay? That's what you're going to do. You're going to put your sell limit there on the third candle. You're going on the long position. Okay. Stop loss below the first candle. Nice. Okay, but if you're still new, if you're still scared, you can always use the first candle, but I always use this one instead of this one, because this one is most likely to be the order block anyway for me. Okay, from what I practice. I'm not saying that should be the order block, but for my practice. All right, because order block could be obviously the candle that pushed the price up, but for me is that candle most of the time. So 1, 2, 3, we can enter there, or we can enter on this candle, don't matter, but let's use the third candle. And then where you would get out, please, you could get out on this high. Okay, you can get on this high is always there, guys. The high on the left will always be there because that's where liquidity is. You can get out there, or you can get out on the actual last candle that push the price to the downside. So that should be that. But I should say, when you are still new, you can maybe just leave it there on 1.8 or 1.1. It depending on you what you want to do, but to be safe, you can target your 2% over there on the previous old liquidity there that was taken out, or you can just look on the left to see if there is a last candle that pushed price to the downside, and you can have your nice buys like that. Okay, so this is it. All right, so this is it. This is how your model should be looking like. Just one time frame. Look into your left, see the old low. If it's been taken out, look into that wick. That should signify price have been price did take out the liquidity, and then from there you should push to the upside, seeing your 3 candles. If you're not seeing 3 candles, that is not the model. I wouldn't know what you are doing. So because most of the time price could give you a nice big candle, then push back to the downside, because price does what it wants to do. It does not care about you or myself. So and then you would enter on this third candle. From the third candle, you let price go, looking into your liquidity right there. So you should always look into the QD there, which is liquidity there. And then if we're taking that out, if you are brave, you can let price come to 2%, or you can let the price come to your nice candle right there. And that is it. And that is the buy model for trading just one time frame. And this really works all the time, and you should try it out. If you want to see how I trade the selling model in just one time frame, which is the 1 hour, you can comment down below, and I should do another model for you guys for the selling side. And thank you so much for watching. See you again on the channel. Cheers.